Hello, all. Welcome to this session. So in this session, I'm going to talk on the stockbroking, one of my favorite subject. So stockbroking is the financial service which is offered with the fees based. A stockbroker is a member of a recognized stock exchange who buys, sells, or deals in securities. A certificate of registration from SEBI is mandatory to act as a broker. SEBI is empowered to impose conditions while granting the certificate. As we know that the SEBI, the Security Exchange Board of India, which regulates the Indian market, NSE, all the buying, sales, and all transactions happening under the SEBI. So those who wants to those who want to become broker in the stock broking, they can opt for the certificate registration with the SEBI, and that is mandatory to become a broker. As a member of stock exchange, he will have to abide by its rule, regulation, and by laws, pay the prescribed fees, take adequate steps for redressal of investor grievance with 1 month of the receipt of the complaint. Keep SEBI informed about the number, nature, and other particulars of such complaints. Registration: how to apply through the stock exchange of which he is a member. The application must be forwarded by the exchange to SEBI within the 30 days from the date of receipt. The exchange should also include a statement to the effect that no complaint arbitration cases are pending against the applicant. For granting registration, SEBI checks whether or not he is eligible to a member of stock exchange, has the necessary infrastructure including manpower to discharge his activities, has past experience in business of buying, selling and dealing in securities, whether there are any disciplinary proceedings against him by stock exchange. So this is all the process to granting the registration of the applied person. The payment of fees, the 5,000 plus 0.001% of his turnover to excise of 1 CR. So this is the fees which has to be paid by the broker who wants to become with the SEBI, who want to work in the stock market broking. The code of conduct: registered stockbrokers have to abide by code of the conduct. So there are many code of conducts under which for the stockbroking. So let me give you some examples of the code of conduct. So code of conduct is a set of rules outlining the norms, rules, and responsibilities for the individuals and organization. Right. So the code of conduct: generally, a stockbroker shall maintain high standards of integrity, promptitude, and fairness in the conduct of all his businesses. Excesses of due skills and care. A stockbroker shall act with the due skill, care, and diligence in the control of business. Stockbrokers have the following responsibilities as well, like manage client portfolios, deciding about when to buy and sell. So that we will discuss in upcoming slide only. In this session only we will discuss that part. Okay, so next is the appointment of a compliance officer. Guys, you might have heard my voice is a little lower as my I'm not well actually. So no problem. So appointment of a compliance officer. Every stockbroker should appoint a compliance officer, monitor the compliance of secure relations. He should immediately and independently report any non-compliance observed by him to the SIB. Not to deal with the unregistered sub-broker. A stockbroker should not deal with any person as a sub-broker unless he has obtained a certificate of registration from the SEBI. Inspection and penalties: SEBI is empowered to inspect the books of accounts and documents of stockbroker. A stockbroker or a stock or sub-broker who contravenes any of the provisions of SEBI Act, rules or regulations is liable for penalty. Capital adequacy norms, base minimum capital and additional optional capitals. This is the one of the important point to discuss now under the stockbroking. So base minimum capital. An absolute minimum of 5 lakhs should be maintained as a deposit with the stock exchange by member stockbrokers of Mumbai and Kolkata stock exchanges. Rupees 3.5 lakhs by those of Delhi and Ahmedabad exchanges, and rupees 2 lakh minimum requirement for other stock exchanges. So right now we have a one exchange, that is NSE, which is in Mumbai, and BSE as well we have, that is in Mumbai as well. So the NSE is the government regulated and BSE is a totally private firm. But here in this slide you can see the three locations, right? Mumbai, Kolkata, Ahmedabad, Delhi, and other locations. Why? Actually the operations happening from the four locations. That's why it has mentioned like that. Additional and optional capital, not less than 8% of the gross outstanding business in the stock exchange, defined as the aggregate of up to the date sales and purchased by a member broker in all the securities put together. One of the outstanding business reaching 10 times the base and additional capital, a broker has a responsibility to intimate the stock exchange. If the outstanding business reaches 12.5 times the base and additional capital, the member should not increase its outstanding business until additional capital has been brought into his business and the stock exchange is satisfied that the member could be allowed to trade further. Clients and brokers. All brokers must keep their own money and money of the client is in separate accounts. So brokers have to make payment to their clients, deliver the securities purchased within the 2 working days of payout unless the client desires otherwise. So this is the rule for the securities which is bought in the market, that has to be delivered in the depository account within the 2 days. There is a rule for trading is a T plus 2 days. I think nowadays the rule is now T plus 1 day. I think I need to check with the SEBI. I will check on the SEBI website. Okay, so they can buy securities for clients only on the receipt of 20% margin on the price of the securities proposed to be purchased. The broker must issue the contract note for purchase sale of securities to the client within 24 hours of the execution of the contract. Subbrokers. A subbroker acts on behalf of a stockbroker as an agent or otherwise for assisting investor in buying, selling, and dealing in securities through such brokers, but it is not a member of stock exchange. Stockbrokers wanting to do business with more than one broker need to be separately registered with the SEBI for each broker. Foreign broker. A foreign broker can operate only on behalf of registered FII. He cannot deal in securities on his own account as a principal. Stock market, cash, normal trading through NSE. India has a history of a stock exchange limited in their operating jurisdiction to the cities in which they were set up. The NSE represented an attempt to overcome the fragmentation of regional market by providing a screen-based system that transcends geographical barriers. Objectives: to set up a nationwide trading facility for equities, debt instruments, and hybrids. So this was the one of the important objective of the NSE, the stockbroking, to set up a national trading facility so one can trade from any location in India. Also, you can trade from outside as well. So this is the trading facility which is offered by the SEBI for the buying and selling the securities, for the debt instruments, for hybrids funds as well. So nowadays we can buy and sell mutual funds as well at sitting at the one place. Right, so this was the objective, and with this objective, the government is getting the more revenue. They are collecting the GST, CGST, Then they are getting the STT as well, security transaction taxes. Right? The NSE has three segments for cash trading in securities: the wholesale debt market, capital market, and trading in central government securities. So the wholesale debt market is where you will get the debt fund and debentures. In the capital market, the investor will get options to invest in the cash stocks, company stock, and trading in central government security, that is the bond. Right? So wholesale debt market segments provide a facility for institutions, body, corporates to enter into high value transaction in instruments such as government securities, treasury bills, PUC bonds, units of mutual funds, certificates of deposits, commercial papers, and so on. Capital market segment provides an efficient and transparent platform for trading of equity, preference shares, debentures, warrants, coupons, exchange traded funds, ETF, and this segment started trading in November 1990. So actually, the stock market started in India in 1994. Before that, the people were buying the preference shares with the contract note as a hard copy. Trading mechanism. A trading system is known as the National Exchange of Automated Trading (NEAT). Online, fully automated, order driven. Online, fully automated, order driven screen based trading system where a member can punch into the system quantities of securities and the prices at which he likes to transact, and the transaction is executed as soon as it finds a matching sale or buy order from a counterparty. So this is how trading is happening in the market. So derivatives trading, a SEBI set up LC Gupta Committee on November 18, 1996 to develop appropriate regulatory for derivative trading in India. Derivative means a derived price from the preference shares that is actually price. The derived price is derived from the actual price. The committee submitted its report on March 17, 1998. The Securities Contract Regulation Act was amended in December 1999 to include derivatives within the ambit of securities. Derivatives trading commenced in India in June 2002 after SEBI granted the final approval to this effect in May 2001. So this was commenced in India around June 2000, and after SEBI granted the final approval, this effect the trading started in FNO. That is the derivative trading started in the May 2001. From there, many people have lost their money in option trading. It permitted the derivative segments up to stock exchange, NSE and BSE. So they are clearing houses, cooperation to commence trading and settlement in the derivative segment up to stock exchanges. To begin with, it approved trading in index future contract based on Nifty and Sensex. So for starting this derivative trading, it approved trading in the index future. The trading in index options commenced in June 2001, and in options on individual securities commenced in July 2001. Right. So in derivative there is two trading options available: future and option. So future price is derived from the cash price, and the option price is derived from the cash price movement as per the strike price. Okay, so it is started in the July 2001. Future contract and the first what they have done first, they have launched the option trading for index only in June 2001. After later 1 month, they have launched the options for individual securities as well. Right? Future contracts on individual stocks was launched in November 2001. So first option came up, after that future contract launched for the individual stocks. Exchange traded interest derivatives contract have been introduced with effect from June 2009. Clearing and settlement. The National Securities Clearing Corporation Limited undertakes clearing and settlement of all trades executed on the FNO segment, future norm segment. This is the totally derivative segment of the NSE. It also acts as a legal counterparty to all trades and guarantees their final settlement. All future option contracts are cash settled. So money is used to trade in the future option and that is settled in the cash. So question for revision, just you can make a short note on this short stock booking and NSE, and you all know the answers as well very well. Still, if you have any doubt, you can connect with me personally. Thank you. Best wishes.